A full due diligence report on Citigroup Inc. or DAO, C, is provided below based on verified data from financial and investment platforms with a focus on recent performance, 2025 where available, and strategic direction. Company overview. Feature details. Business model. Citigroup is a global systemically important bank, GSIB, with a focus on institutions and cross-border banking. Its strategy, under a multi-year transformation initiative, is to become the preeminent partner for institutions with cross-border needs, a global leader in wealth management, and a valued personal bank in its U.S. home market. Primary segments. 1. Services, Treasury and Trade Solutions, Share Securities Services, the crown jewel business. 2. Markets, Fixed Income and Equity Trading. 3. Banking, Investment Banking and Corporate Lending. 4. Wealth. 5. U.S. Personal Banking, Branded Cards, Retail Services, Retail Banking. Industry position, a Tier 1 global investment bank and a leader in cross-border payments and treasury management due to its vast global network spanning over 180 countries. It serves 85% of the Fortune 500 companies. Citi is currently in a multi-year restructuring to simplify its operations and improve profitability. Financial health, Q1 2025 data. Metric Q1 2025 value commentary revenue, $21.6 billion increased 3% year-over-year, driven by growth across its 5 core businesses. Net income, $4.1 billion increased 21% year-over-year, largely due to lower expenses and higher revenues despite higher cost of credit. Earnings. Per share, EPS, 1.96, increased from 1.58 in Q1 2024. Return on tangible common equity, ROTCE and A, Q1 2025. A key internal metric. Citi targets for 10% to 11% in the medium term. CET1 capital ratio 13.4%, well above the current regulatory minimum, demonstrating a strong capital buffer. Tangible book value per share, TBVPS, 91.52, increased 6% year-over-year, a critical measure for valuing bank stocks. Total assets, $2.57 trillion end of Q1 2025. Total deposits, $1.32 trillion end of Q1 2025. Valuation metrics, approximate indicative as of Q1 2025. Bank valuations are often best viewed relative to book value, especially tangible book value, TBV, metric indicative value, based on recent data. Commentary price to tangible book value, PTBV, approx 1.09 times, recent observation, trading near 1.0x, tangible book value, which analysts often cite as an important milestone, suggesting the market is giving full credit for the underlying tangible assets. Price to earnings, PE, trailing, varies based on net income volatility. Historically lower than peers due to restructuring and past struggles, suggesting a potential deep value play if the turnaround is successful. Relative valuation, historically trades at a discount to major U.S. peers like JPM and BAC, primarily due to years of underperformance, regulatory issues, and the ongoing transformation. Closing this gap is a central goal of the current management. Growth Potential Services segment, MOAT, the Institutional Clients Group, ICG, particularly Treasury and Trade Solutions, TTS, and Security Services, is Citi's core strength. This high-returning global business benefits from cross-border transaction volume and is expected to drive stable fee-based revenue growth. Transformation. The main growth driver is the successful execution of the strategic plan, which involves simplification, divestitures, like Banamex in Mexico, and investments in infrastructure to improve efficiency and reduce regulatory costs. Digital and AI. Investing heavily in generative AI and digital solutions to automate back-office operations and enhance client onboarding. Risk factors. Execution. Risk. The multi-year transformation is complex and costly. Failure to execute efficiently could lead to missed profitability targets and further regulatory scrutiny. Regulatory risk. Citi operates under heightened scrutiny, often referred to as a consent order, by the Federal Reserve and the Office of the Comptroller of the Currency, requiring significant investment in risk management and IT systems. Economic cyclical risk. As a global bank, its investment banking and trading revenues are highly sensitive to global economic downturns, market volatility, and interest rate changes. Geopolitical exposure. Its extensive international presence, 180-plus countries, makes it vulnerable to trade tensions, sanctions, and political instability, particularly concerning its large capital flows. Innovation and moat. Moat. The primary moat is its unparalleled global network and infrastructure for handling massive cross-border capital and trade flows, the services business. Innovation. Focus is on digitalization, cloud migration, and AI adoption to drive cost savings and enhance its core B2B banking offerings. Cyclicality. Highly cyclical. Revenue is tied to the global economic cycle. Investment banking, trading, and consumer lending are boosted during periods of strong growth and suppressed during recessions. Customer base. Predominantly institutional clients, 85% of Fortune 500, with a secondary focus on wealth management and the U.S. consumer through its branded cards. Revenue is geographically diverse. M&A activity. Focused on divestitures rather than major acquisitions, e.g., wind down of Korea Consumer Banking, planned IPO sale of Banamex. This is part of the simplification strategy. Citi is not viewed as a near-term takeover target due to its size and GSIB status. Employee and labor risks. High dependence on specialized, high-cost talent in the financial and technology sectors. Transformation efforts include substantial layoffs and restructuring charges aimed at simplifying the organization, which can impact employee morale and lead to temporary labor risks, though they are currently managed through disciplined expense control.